So last week it was FHA. This week it's conventional.
Wrong. Last week it was conventional. This week it's FHA.
All right. Either way, we got the answers to your questions coming up right after this. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us.
Why did you look at me?
As you can see, the show is totally unrehearsed.
No, it was rehearsed. You know what? Last week we did talk about conventional.
We did, but you said we talked about FHA. No,
I know.
this week we're doing
talk
FHA.
About FHA. But that's okay.
Right.
We're going to talk about the difference.
You know, I've had some comments lately from our Lunch and Learn, some of the realtors and stuff. They totally love
Our show.
Yes, they do.
Because we're unrehearsed.
Unscripted.
We speak from the heart.
Yes, and sometimes before we think.
Yeah, exactly.
we just speak.
So anyway, there's a ton of questions that keep pouring in that we hear all the time.
Yes.
And last week we did talk about conventional loans and the differences and how the programs work. And this week we're going to talk about the government-insured loan, the ever wonderful FHA loan, which I know is your favorite.
It is. Well, we do it.
I like the FHA loans because I think it's a different, I don't want to call it a different, it's just a different pool of people that fit into FHA than conventional, I would say.
And they're very grateful.
They are.
It's a great program for people who are kind of struggling and need a little bit of help either with closing costs or need a little help with debt to income ratio or something like that. It's a great program, especially for even though it's not a first-time home buyer program only, it's great for first-time home buyers because they're usually kind of like rubbing two nickels together to come to the closing table.
Yeah. I mean, obviously, this isn't on our list of questions, but, seller contributions between...
That's one of the biggest things.
The biggest things,
right.
And why we would go, you don't have to have bad credit to go FHA.
No.
It's not for bad credit, although they are more lenient if you do have credit challenges.
Yes.
I'm being politically correct now.
Yes, you are. Credit challenges.
Credit challenges. So, but the seller contributions can make a big difference and the low down payment. In fact, there's really no tangible benefit on an FHA loan like a conventional when you're putting more money down. I mean, other than the MI factor, you'll say 0.5.
Right.
Which is 0.05, mind you, if you put 10% down versus 3.5% down. So, but sometimes you got to put 10% down to get an approval too. So, you know that. But seller contributions.
And FHA goes to the lower credit scores, a lot lower credit scores, which happens to be one of the questions on our list. I'm probably jumping ahead a little bit, but one of the questions on the list is what is the minimum credit score on an FHA? Everyone knows, we talked about it last week, 620 is the minimum on a conventional loan. FHA, it's also a 620, but they will actually go down to a 580 with compensating factors. It is usually done as a manual underwrite. And as Barry said, sometimes we'll require a little bit more of a down payment than the normal 3.5%, along with some other extra things that they're going to be looking for.
You know what's so funny, though? If you read the FHA handbook, there is no minimum credit score.
I know.
But that's so funny. But you know what? It is in your best interest to be above 620 because the pricing is definitely not going to be as good. And the other thing is, if you read the fine print when you get down below 620, it's like you can't have really any lates.
I know.
In the last 12 months.
I know.
So unless it's medical related, you're probably not going to get approved if you do have lates. So, and normally, if your score's below 620, you got lates going on.
Yeah.
So. It
There's
just
a reason
go,
it's under 620.
So while there's no minimum per se
score, there is.
There
It's
is.
just kind of unwritten. But
so that's one of the big questions. So conventional versus FHA, seller eligible paid closing costs is up
That's
to,
one of the best perks about it is that the sellers are allowed to
and
contribute a lot
prepaids,
more.
up to 6% versus conventional being 3%.
Right.
So what does that mean in layman's terms? $100,000 loan, you're buying a house. On that, you can get $3,000 on a conventional paid by your seller of prepaids and closing costs. On FHA, you can go up to $6,000. So
And as all of you know, closing costs are not $3,000. They're just not going to be $3,000.
Well,
They're going to be more by the time they put insurance in there and
but my bank said they were only $2,000.
by the time they
I
add the
won't tell you who my
insurance
bank
and the
is.
tax, real estate tax prorations and things like that, before you know it, it's definitely more than $3,000 in most transactions. So
Yes, yeah, absolutely. And
it's nice that the seller can pay that.
Well, and of course you can, there's other ways to cover closing costs, credits to seller,
Right.
et cetera. So there's
But all of those credits cannot exceed whatever the maximum is for the guideline. So on conventional loans, so between what the seller is paying and what the lender credit might be, it can't exceed 3%. Whereas on FHA, it can't exceed 6%.
Right.
So
that's a big
definitely a
deal.
lot more.
That's
That's
a
a
big deal.
really big plus
Yep.
for FHA. So
All
some
right.
of the other FHA
So
stuff.
biggest question, how long on an FHA do I need to wait after a bankruptcy, foreclosure, or deed
Short
in lieu?
sale or deed in
Short
lieu,
sale.
right.
How long do you got to wait?
This is another one of the great perks.
Yeah, so on FHA, go ahead, DeLynn, because I know you just love to talk about this.
I just know these by heart. So on FHA, it's actually one of the most lenient. That's what we were talking about before. They're very lenient. On conventional, you have to wait 7 years on a bankruptcy.
Oh, lenient, not
Lenient.
I thought you wanted me to lean in. Sorry.
On FHA, it's only 2 years.
By the way, we rehearsed that today. Leaning in. That was the big part of
7
the
years
show.
versus 2 years. That's a big difference.
It is a big difference.
On foreclosures, on conventional, on a bankruptcy, sometimes 4 years versus 2 years on FHA. And on a foreclosure, conventional is 7 years versus 3 years on an FHA. So, after the crash, when so many foreclosures were going on, so many short sales were going on, so many deed in lieu of foreclosures were going on, there was a lot of this going on, and it was really beneficial that people were able to get back into the market after fixing up their credit, get back into the market in just 3 years,
Right.
and be able to buy a house again instead of having to
Awesome.
wait
They
the
can
standard 7 years.
reestablish and,
Right.
you
So that's really kind of what helps spark our economy and our
Right.
real estate market going again.
Right.
Was that we had the ability to do that. Another great reason for FHA.
So
It is
no-
a good program.
It is. No, another great question I get all the time is, why would I go FHA versus conventional?
Mm-hmm.
And why wouldn't I? And you know what? There's multiple reasons to,
Right.
in consideration. But the one thing people don't talk about enough is everybody's looking at rate. What's your rate? What's your rate?
I
What's
know.
your rate? Do you really care what your rate is? Don't you want to know what's my payment?
Right.
And FHA, when it doesn't really matter what your credit score is. The MI factor is going to be the same.
Yep.
It's going to be 0.85 in the current market. On conventional, if you're not putting 20% down and your score is a little lower, it may be a lot more cost effective
Right.
to go FHA.
Your PMI might actually be higher on a conventional loan than it is on an FHA loan if you have a lower credit score with conventional.
Yeah, FHA doesn't care. That's
Right.
just such a beautiful thing.
It
and like I
is.
said earlier, the only difference is if you put 10% down, and it's 0.05 difference.
Right.
It's not a huge amount, but we got a lot more tips on all this and more questions answered. We'll be back right after this.
And finance expert that goes to bat for you every day as a consumer advocate. Your host and the consumer quarterback, Brandon Rhymes.
All right, we're back, everybody, with more questions about FHA, actually versus conventional.
Right. Because we did conventional. So now we're doing a little bit of a comparison. And when I meet with clients, I always, first-time home buyers or just people with low down payment, I put them side by side. Here's the conventional and here's the FHA. Which one do you want to go to? And it all depends on what their situation is, how much money they have to put towards the transaction, things like that.
Really thorough.
I am. I go through everything with them so they know exactly what to expect.
You know what, though? I don't like to show people what they don't qualify for. Like if I know a borrower is going to be a 620, I'm not going to talk to them about a conventional.
I tell them about it, but I say to them, and I'll show them, but because you have a 620 credit score, your mortgage insurance is going to be like, $263 as opposed to with FHA, your mortgage insurance is like $102.
Right.
It's like over $100 difference in payment. So
let me ask you, one of the questions that come up, what rates are lower, FHA or conventional?
FHA.
Yeah.
Because it is insured by the government. So the rates are a little bit lower on that. So by the time you work everything out anyway, honestly, for the most part, if all is said and done, and we have a middle of the road person, so to speak,
I like that person.
Usually your payment is like $20 difference.
Right.
$20 or $30 difference in the payment. That's all it is.
Weigh it out. Do you need closing costs? Do you need more?
Exactly.
Loan size makes a difference. So,
right.
Okay. Another big question. Loan size. Like I'm buying a $350,000 house. Can I go FHA?
Good point.
Or do I need to go conventional?
Yeah.
Which way would you go?
So very good point. FHA has caps, and $350,000, you're going to have to put down $40,000.
Yeah.
So FHA's cap is $314.
Yes.
I don't even know. I think it's $314 changed. They changed it. So $314,000. If the house is more than that, you're not going FHA with it, or you're putting down a really big down payment. Yeah, you can come up with the difference.
So.
Yeah. So, and we've done that with people too, who maybe they have some credit challenges, even though they're putting a lot of money down, they can't go conventional for whatever reason, and but they fit into FHA. So that works. One of the things that I want to share with our real estate partners out there is one of the big questions that we get is, actually, it's not even a question. It's a fear that seems to be in the industry out there. They're afraid that FHA takes longer to process.
I wonder why that fear.
No, I don't know where that comes from. Yeah, I don't know where that comes from. FHA takes no longer to do or process than a conventional loan. It's all the same. We have what's called DE, delegated underwriters, sitting in our underwriting department who are licensed to do FHA. So it doesn't have to leave the building. It doesn't have to go anywhere. Yeah.
It should be DU.
It's direct endorsement is what it means.
Oh, okay.
Hey, just ask. Filled with all of these stupid acronyms, but stands for direct endorsement underwriter. So that is somebody who is licensed by FHA to be able to underwrite FHA loans. And we have them right in our building. So it doesn't take any longer. In the old days, maybe they used to have to send them out, but they don't anymore. So they should not take any longer than anything else. The other thing that comes up a lot is, oh, well, FHA appraisers are just so picky about the appraisal and the property, and they're going to tear it apart and everything.
Yeah.
Not really.
You know what? The FHA appraiser is the same appraiser that your conventional appraiser.
Right.
It's the same person. It's a different report.
Yeah.
They are required to crawl.
Couple of extra pages.
Couple extra. Yep. They need to go in the attic.
Right. They have to take a picture of the attic.
Yep. And that's key. So if you start out as a conventional and you got to flip to an FHA, that appraiser is going to go back out and charge
Take
you.
a picture of the attic.
And charge you that additional reinspection fee per se.
So let's touch, because this is something that a lot of real estate people want to know about. So let's touch on some of the things that the appraiser is looking for in an FHA over and above that, maybe not on a conventional. So on an FHA loan, in addition to the picture of the attic, they're looking for structural things. So, if there, and I've had it, there's a hole in the wall. They don't really care about that as much. It might be noted, but it's not something they're going to say,
that's going to kill the deal.
It's not going to kill the deal. That has to be fixed. No, it doesn't. However, if they took a ceiling fan down or something and there's wires hanging from the ceiling, that has to do with health and safety. That's going to have to get a plate put on it or something.
So anything to do with safety is going to be a problem. On
health,
FHA.
Safety, broken windows. They're afraid that they're going to crash in and hurt someone.
Railings,
so broken windows.
I've seen that on a balcony. If there's if a railing is loose, that's going to be a problem.
And then they don't. The other thing is peeling paint, and the reason why, and it's any peeling paint. So just go around the house, make sure that there's no peeling paint ahead of time or whatever. If it is, doesn't even have to be the same color. Have them scrape it off with a SOS pad. I don't care.
And it can be blotched with any color paint.
Any
over
color
it.
paint at
It
all. Just
cannot
put
be
over it. It just
peeling.
cannot be chipping or peeling paint because, again, that has to do with, small children possibly picking it
So,
up and
but on
eating the paint chips.
conventional-
And it's a health and
Conventional doesn't care about
safety.
that.
Conventional doesn't care about that.
Yeah.
So there's not a lot of things, and it's not hard things. So it's nothing to be afraid of. And if you have any questions or whatever, run it by us, call us. Our appraisers are so good. They are so wonderful about answering questions about that. We can give you, some of the FHA appraisers' phone numbers. They don't even mind that. So just, we've done this before. Take a picture of something that you're not sure about and text it to one of the appraisers. Hey,
True.
is this okay?
So true story. So I had a buyer looking at a house, and they wanted to buy a house, but they had to go FHA. And they went in, and they're in the MLS, and their buyer's agent's helping them. And in the listing, it said no FHA.
Yeah.
So I had the other agent contact them and ask, how come it can't go FHA? There must be a reason. Is there peeling
And
paint?
there's
Is there
usually only a
railing?
couple of reasons
Yeah.
that hold it back from that.
And you know what he said?
What?
I had a bad experience last time, so I warned my seller, not to take FHA. And I'm sitting here thinking, okay, that's an unexperienced agent.
Right.
You have to have a bona fide reason
Right.
to not go FHA, not because, your seller's scared that.
You had a bad experience with a different
experience.
house.
Right, and the seller was weary because FHA people may have lower credit scores.
See, and that's what
that's
we want to
wrong.
try and get. It is wrong.
Because I'm going to tell you, a lot of times the FHA deals can go much easier because it is a
Government-backed.
loan.
They
and it's
do. They
government
go through
insured.
smooth. They go through easy.
Yeah, so don't be afraid of them.
Right.
I would not
The
be
only
afraid
other
of 'em.
thing, so the only reason that usually holds it back from going FHA is, again, something wrong with the property. And again, like we said, it's just really structural. The other thing in safety, the other thing that I did want to mention, it doesn't like concrete floors. So if you
Floor covering.
Right. It needs some kind of floor covering. And the appraisers are really cool about it, and FHA is pretty cool about it too. Even if the floor is painted, that's covered. That's fine. So tell them, sweep it up really good, paint the floor something, and we're fine. It doesn't, again, it's not as bad as a lot of people think. We don't need, thousands of dollars worth of
You don't
carpet
have
to
to
be
put
put
in
down.
hardwood or
No, you don't
anything.
have to do
They
any of
just
that.
need to be, again, it's a safety thing. All right,
Exactly.
so you know what? We have one of the biggest questions ever, and always asked in FHA. But I'm not going to tell you what it is till we come back. We'll be back right after this.
Dude, I got this cool.
Consumer advocate, your host, and the consumer quarterback, Brandon Rhymes.
All right, we're back with the biggest sought-after question in FHA history.
Well, probably like 3 big sought-after
Right, you're
questions.
right. There's a lot of them. And you know what? I was telling the story before the break. I was talking about the story of that agent. Now, one of the good bona fide reasons why a property listed, because buyers ask, well, why does it say it won't take FHA?
Right.
Well, the flip policy
Flip.
is one.
That's what I was going to say. That's
now-
one of the few reasons that will hold it back from FHA.
Yeah. So if you have and a lot of investors are buying up properties. They seem to be fewer and fewer, and fixing them up, gutting them, flipping them per se. And if they do it within 90 days, you're not going FHA. There's just no way. There's
There
no
was
workaround.
a few years ago, FHA was doing them, but they stopped doing that.
Yeah.
So if it's less than 90 days that the seller has owned it, it is not happening under an FHA loan. And that's one of the only reasons that a house shouldn't be going FHA, structural, problems or a flip.
Right. So that's a big deal. Now, after 180 days, the rules are different. So
Between 91 days and 181 days,
the rules are different.
you are allowed to do a flip FHA.
But there are additional requirements now. So
you have to have a second appraisal. It has to
Which-
be on the lender's FHA certified appraiser list, so it has to be an
But it doesn't
approved
have to
appraiser.
go through an AMC, though, so you can actually pick that appraiser.
As long as they're on the lender's
list.
approved list,
Yes.
which most of them are. So just check that out. But the other really unique thing is that the buyer can't pay for it. So just keep that in mind. It's going to have to be something that the seller's going to have to foot the bill for, is that second appraisal. Sometimes, and it's an underwriter call, they may or may not ask for, depending upon how much. Like if they bought the house for $50,000 and now they're selling it for $150,000, they might want receipts and things like that. Know exactly what was done to the house. So just be prepared for that.
So they have to document if there's a large amount of improvements done during that flip.
Right.
So that's important. to know.
Depends on how much, how much more they're selling it for from what they bought it for. So that's definitely a biggie. So definitely something to be careful of if you do have an FHA buyer trying to buy one of those houses that everything is done on. Let's face it, they're really nice.
You're like,
They've
I
done
don't
nice
get it.
jobs
It's so
on them.
beautiful. you
Yes.
know?
I've told a lot of realtors about that, and they didn't know that, so they've been very appreciative
So
about
when you
that
list a
second
property,
appraisal.
keep that in mind. I know a lot of the agents know that, but buyers often ask us why why is something not FHA eligible, and that's one of the biggest reasons right there.
One of the other questions we get is about manufactured homes.
Oh, you do those? So DeLynn does all manufactured homes at the mortgage firm in Trinity.
So yes, FHA does do
Mortgages.
mortgages.
FHA does mortgages, yes. We'll be back next week and tell you more about FHA doing mortgages.
FHA does manufactured homes with only 3.5% down. Yes, I know that there are some conventional lenders out there that will do a manufactured home, but they require 20% down. Guess what? You can do it FHA with only 3.5% down. But just like anything else, however, there are some requirements. It does have to be newer than 1976, no lead paint, all of the rules and regulations that are with conventional manufactured homes, the same thing with FHA. In addition to that, FHA does have really strict requirements. A lot of times we find the manufactured homes out in the rural areas, kind of further out in the country, and they are on well and septic, and they have extremely strict guidelines on how far away the well has to be from the property lines, from the road, and more importantly, from the septic system.
So for our agents, I think it's important that they're educated on this and what are the setback requirements on it. So the property line, it has to be, is it 10 feet for both?
Yes.
Okay.
So from your neighbor's property line, the well has to be 10 feet from that and 10 feet from the road. It can't be near the road as well. So it doesn't want it too close to anything where it could. And then, of course, obviously for cross-contamination purposes, preferably.
That's for the well we're speaking of. What about now? A septic tank is 50 feet. So, you're going to need somebody out there to.
And I need a good-sized piece of property.
Yeah. So it's 50 feet for both. So has to be from the property line. And what else?
And then from each other.
From each other.
So from the well and the septic.
Very specific, and there's no leniency on
There's
that guy.
none. There is no wiggle room on that.
And then a drain field has to be 100 feet or 75 feet of existing construction and allowed by a local authority. So if the local authority says it's okay, and accepts it,
which
then it's okay.
your leaching fields. Wow. So now the last one that we did want to talk about with the no wiggle room, because this is the other one that comes up. We have a lot of people who are maybe vacating. They got relocated, so they're vacating their current home that they have an FHA mortgage on, and they're going to be moving, several towns away or something because maybe they got, like we had somebody, got transferred. And FHA is extremely strict about this too. Another thing with no wiggle room on it is how far away from the house that you're vacating, because you have an FHA mortgage on that, to the new house that you're buying. 100 miles. It
Or
has
more.
to be 100 miles or more. I did have one where it was 96 miles. The person lived in, I want to say, Riverview right now, I think it was, and they were getting transferred and relocated up to Leesburg. And although it was like an hour and 45-minute drive, it was 96 miles from door to door, and FHA said no.
Yeah.
There was
But
no wiggle room.
Now, if they were eligible to go from their current FHA to a conventional, there
no
would have been
problem.
no problem there.
Yeah.
Wow.
That's if you're doing if
So
you have an
many
FHA on
rules.
your current house and you're doing an FHA on the new house.
You know what?
That's when
There's
that comes
a
into play.
lot of information.
You guys think our job is easy.
There's a lot. You know what? If you're buying a house or if you're a real estate professional, get with a lender who knows all of these rules and that can work with you and help you make your transaction easier and smoother.
Yes. Yes.
If it's not us, I don't know why it wouldn't be, but
I don't know why it wouldn't be, 'cause
but
we
I'm
like-
just saying.
we
But
like say
find
these
somebody
things in
who's
our
really
sleep.
good. No, there are a lot of great people in our industry. I'm
I
not
know.
knocking them. So anyway, let's talk about current events because we're about out of time, DeLynn.
I know.
You know
See
what?
how fast these go when we're
Our
just
lunch and
we're
learn
spewing.
last month with Amber Mariano.
It was amazing. We got so many
people.
great,
But guess
great
what?
responses.
This month is your chance to get certified for the Pasco County Down Payment Assistance Program. And if you don't know this, you have to be recertified
Every year.
Every year.
And if any
to
of
be on
you
the
guys,
list.
right, and if any of you guys, many of you have done this with us. We do it once a year, every single year. So
Now is
last
the
year,
time.
guess what? We're all expiring. So we did it last year right about this time. So we're all expiring. So it's time to get recertified
So
again.
The date on that is October 8th. Make sure you're there. It's going to be at Carrabba's.
Same thing, lunch and learn, Carrabba's, 11:30.
Carrabba's, Port Richey. Make sure you get with us, RSVP with us. Get on our Facebook page,
Because
Mortgage Firm
we already
Trinity.
have 34 people on that, and we are limited in
Yes.
Carrabba, so we already have 34 people on that list. So make sure you
Before
give
we
me a
even
call,
shop it.
or Barry,
Yeah.
or
And then,
one of the girls
course,
at the
Bowling
office.
for Boobs, September 24th. Go on WPBA.biz. You can be a spectator for a great community event. It's going to be a great time. So anyway, like our show, share us. Thanks for watching, everybody.
We appreciate all of you guys. We are today and every day.
Moving forward.
We'll
Have
see
a
you
great
next week. Bye-bye.